Sunil Singhania, Head Equities at Reliance Mutual Fund as well, joins in on the show. Sunil, hi, morning. For this year, India has really outperformed the region. Have you been surprised by the pace of the rally, and what is the approach that you're now adopting?
Again, this rally, frankly, including us, has got everyone caught unguarded, so to say. The speed and the intensity has been very, very sharp. There might be some events here and there which might ensure that there is some small, you can say, reactions to the market. However, one interesting thing is that after a long time, we are seeing investors, both global and domestic, looking at these reactions to invest aggressively, which was unlike the past 18 months where investors were looking at upticks to sell. Now it's changed to buy on reaction. So even if there is a reaction, our call would be that those reactions are going to be short and swift.
Right, Sunil, morning. Nikunj also joining in. My compliments on the same forum. Exactly a month ago, you had indicated to our viewers that it's time to buy, and it's time to buy equities aggressively. So my question today is that now that liquidity is back, do you think for Indian markets the bear market is over and the new market or the new bull market has started?
I wish it was so simple. The good thing is that at least the optimism is back. Equity investment is again starting to be looked at. We have seen the markets move from, you can say, over-optimism to huge pessimism. We are now in a correction mode. At this point of time, we won't say that the markets are expensive. In pockets, they're not cheap. They are fairly valued. But there are a lot of companies on the mid-cap side, on some of the beaten-down sectors, where, people had given them valuations of probably liquidation. And those have already come back. As you said, some of the stocks have moved 70-80% in the last 1 month. But they were, again, we'll just highlight that they have to be looked from their fair valuation and from the highs rather than from the lows. So our attempt is to try and see how we can rejig and move from sort of just exuberance kind of stocks without fundamentals or moved up to companies which have fundamentals and which still to participate in the rally.
Sunil, what have you made of the policy action in the power space now?
I think there is, Nikunj, no doubt that power sector in India has got huge potential. You have a severe power shortage. The demand is, unsatiable. So from a developer's perspective, I think, it's a very good business to be in, where you can put in huge sums of money and then you have, a huge demand. What has happened over the last couple of days has been that the roadblocks, which were, becoming very, very big for the power sector in terms of fuel availability, has sort of been, addressed completely as far as coal is concerned. So I think it's a very, very positive move. The fuel security which the power companies will get will ensure that the projects which are already either completed or in the process of being completed over the next few years would be ensured with a reasonable coal supply. And there's incentive and disincentive both in terms of working as far as the PLF is concerned. So I think it's a very, very good move. But more importantly, I think this is a move which is being sort of directed from the PMO office. So there is a lot of seriousness to it. Also, we hear that the EGOM is going to meet again. One, to take up the issue of the problems faced by UMPP very soon, and followed by an EGOM on the gas as far as the power sector is concerned. So from our perspective, this is not a one-off event. It's a chain of events which will ensure that the much needed boost which the power sector needed in India is coming through. And we should not forget that power sector is one sector without which the dreams of India to sustainably grow at upwards of 8% will never be met.
Sunil, fair point. The FSA or the fuel supply agreement indeed is a game changer for some of these power companies. But from your perspective, are power stocks looking slightly expensive? Because most of the power stocks this year or this calendar year, they have already appreciated by about 50 to 80%. Is all the good news baked in at current levels?
See, again, we are probably making the mistake of seeing the lowest price and trying to see how much they have moved up from the bottom. However, what we have to also look at is what are the valuations compared to the reasonable, sort of fundamentals which these companies have. And, again, without naming any companies, there are definitely pockets where if things start to move or start being pushed the way the signs are now, there is definitely potential of significant more upsides. We have seen, the kind of opportunity and the kind of interest which with the sector, attracted in the heydays of 2006 to 2008. Obviously, the last 18 months, because of multiple reasons, whether it was fuel availability or whether it was land availability or the interest rates going up, I think we saw the reverse. I think there is definitely optimism from our perspective, and we do feel that this is one sector where a sustainable 14-15% growth, for a long period of time is definitely possible.
So Sunil, what's your sense? Do you think the power sector will now be the next leader in the bull market?
I don't know whether they will be the leaders of the bull market, but it's a very good sector. The good thing is that everything which was working against the sector has started slowly working in favor of the sector. So on one hand, you have interest rates which have started to come off, which is again very positive because it's a high capital intensive, sector. The other thing is that equity investments, which were sort of a no-no for investors across the world, have started to come back again. So I think this risk appetite will ensure that the equity capital which some of these power companies, the larger power companies need, will also be available. Added to that, the PMOs and the government's attempt to ensure that all the roadblocks for this sector are slowly addressed, again is a very big positive. So I think everything went negative, and now slowly everything is starting to come back as far as positives for the sector is concerned. So I think we remain quite optimistic.
Sunil, in quick time, Nifty has moved from 4,500 to 5,500, now almost 5,600. Do you see 5,000 now acting as a serious base for the Nifty? 5,000 is where do you think there is a lot of support?
I don't know about the numbers, but as I said earlier, I was traveling abroad also, and a lot of local investors also are in touch with us. I think unanimously everyone is looking at corrections to invest. So as I said, corrections are going to be short and swift.
Sunil, in 2011, mutual funds saw net outflows. Is SIP and retail money coming back into the markets?
I think media companies like you should be encouraging investors to put money. Unfortunately, last 1.5 to 2 months, the mood has been so gloomy, in the lead up to the rally, that new money has definitely not come in. But we are already seeing, as I said earlier, interest from investors to put in. They are waiting for a small correction. And on a small correction, we'll definitely see money coming in. One thing I would like to mention here is that there is definitely money in the system. So if NHAI bonds and the IRTC bonds and all those other tax-free bonds can get hugely oversubscribed and collect 30, 40, 50,000 crores all put together, it clearly indicates that retail has a lot of investments, lot of money waiting to be invested. And once the confidence start to trickle down, there is a lot of hope of big money coming in.
So Sunil, apart from power, what is it that you're overweight on, and where do you see value?
There are again a lot of individual stocks, where there is definitely interest. There were concerns about some metal companies. I think if you see, the metal companies have also moved up 30-40%. But from their highs, they are significantly lower. From their fair value, probably from a longer term perspective, there's a lot of value. Near term, there are always going to be concerns about what happens to China, what happens to Europe, what happens to some mines which are in India. But from our perspective, I think there are companies across sectors where a lot of pessimism had been built in. To some extent it has been corrected, but there is still value in some of these sectors. The other thing is that we also have to look at where the regulatory changes can impact positively. So we are big overweight in some of the media companies on the cable side. We feel that there is some optimism which is there on the insurance and the retail side. So I think that wherever there are government initiatives which are likely, including power, you will see some interest and opportunities coming in.
And that seems to be a big portfolio change, or seems to be a big change in stance isn't it, Sunil? Because last time when I interacted with you, you were of the view that it's, one should buy pharma and PSU stocks.
Again, it's every month you cannot change those things. But what I can say is that, yes, no one expected this, the intensity of this rally. The rally has definitely taken everyone by surprise, but it's a positive surprise. I think from our perspective, if small steps continue to be taken from the government, and if the macroeconomic factors which are now looking in favor of India as an economy, so whether it's inflation or interest rates continue, the markets and the economy has a lot of legs from a longer term perspective.
Okay, Sunil, always good to have you on the show. Appreciate you taking the time out this Friday morning.